Good afternoon, accounting learners of the Western Cape. Welcome to this accounting session. My name is Amanda Moyes and I'm your accounting tutor, and I'll be with you for the rest of the year. Firstly, let me commend you for being present at your schools. What I thought about, in thinking about what I want to say to you is that the only place where success comes before work is in the dictionary. And so really, to be successful, you have to work hard. And by being at your schools on a hot Sunday afternoon, you are showing me that you are willing to work hard. Today's session, we'll talk about asset disposal. And I know for a lot of you, it's not your favorite topic, but it's really one of those sections that is examined over and over. And it's such an important section in the matric syllabus. So if you just pay attention today and work through the worked examples with me, you'll see that you'll find asset disposal actually very, very easy. So let's just go back all the way to grade 10. And let's see what is it that you were equipped with in grade 10 already that you now need in this section. So let's just go to the PowerPoint. You'll see that in grade 10, you started with buying a fixed asset and depreciating the fixed asset. We'll talk about depreciation a bit more in more detail later on. Then in grade 11, we spoke about disposal of fixed assets. And then now in grade 12, you have to analyze and interpret the fixed assets. So what is it that you need to know before you can actually do asset disposal? Firstly, you need to know depreciation and accumulated depreciation. You have to know that depreciation is an imputed expense. What that means is that it's not an expense that you're going to have to pay. It's simply an expense because you are writing off a portion of the asset that you are using to make an income with. So it's an expense, an imputed expense, and a nominal account. Then there are two methods of depreciation that you were taught in grade 10. It's the cost price method, and when we work through the example later, you'll see that the cost price method comes up and the diminishing balance method. I'll talk about those two methods in detail, but this is really what you have to know in order to do asset disposal. And then there's accumulated depreciation, which I said here is a contra asset or a negative asset, and it's a balance sheet account. Okay, so what I want you to do is, can we go to our books? Activity 1.1 in our books. So please open your books to activity 1.1. Okay, if you've got it there, it's the very first activity of the first module. I've got the activity in front of me, and there are just a few changes that I want to make. You can see the items highlighted in yellow is the changes I want to make before we start with this activity. The first is the required information said calculate the profit or loss on sale of asset of the vehicle by completing the asset disposal account, and I want you to change that to the 31st of May 2008. Then I also want you to change two dates. I want you to change that date, which on your book says 2009. Can you please change it to 2008? And then please change that date to 2007. It will make sense later on when you see why I'm making these changes. Another date I want you to change, grade 12, is under additional information, which says on the 28th of Feb, yours says 2009, please change that to 2008. And then the last date, please, is vehicle C was purchased on the 1st of December 2007. Okay, you can just look at it one more time and make those changes. It's very important that you make those changes. Thank you. Now let's look at the exercise in a lot more detail. I'll read from the exercise, and I want to show you that there's important information that you're going to have to know from the exercise. Okay, it says calculate the profit and loss, and we say that the date of sale is the 31st of May. The first thing you have to do is ask yourself, and we're going to draw a timeline, when is the beginning of this financial year? So if you can see that the 28th of Feb 2008 is your closing balance from the last year, so it becomes your opening balance. So 28 Feb 2008 is our end of last year, so therefore it's the beginning of the new year. We sold this asset on the 31st of May 2008. It's very important to know when you sold your asset. It's also very important to know the beginning of that financial year. We're just gathering information now, important information. Okay, now they say to you that this asset, Vehicle A, was bought, and I'm reading under additional information, was bought on the 28th of February the 1st of September 2006. So this vehicle was bought sometime in the past. That information is also very, very important. Let's look at our exercise again. And I'm going to circle important information. Okay, the date of purchase is important. The date of sale is important. The cost price that we bought this vehicle for is important. The selling price that we sold this vehicle for is important. Let's look at our slideshow again. So now that we looked at the important information, let's look at why the information is so important. According to the generally accepted accounting practice, there's the historical cost method. Now remember, I circled the 30,000 earlier on. That 30,000 remains in the books for as long as we have this asset. And this means that the historical cost method is applied here. So the historical cost method is important to know why we do this, because it's according to the generally accepted accounting practice that we keep the assets in the books for as long as we have it. Okay? This means that the asset remains in the books for as long as we have it. Then, let's just look at asset disposal. We can dispose the asset in one of three ways: cash, credit, and trade-in. And certainly the exercises deal with each of these. We can sell an asset when? At the beginning of the year, during the year, or at the end of the year. Okay, now it is important to know the order in which we dispose of the asset. Okay, what we do need to know is, and I circled it earlier on, we do need to know the cost price of the asset being sold. We also need to know the accumulated depreciation to date of sale. So let me slow down. Before we can do asset disposal, there's 4 important bits of information that we need. The first thing, grade 12s, is we need the cost price of the asset. We must have that. In this case, it's 30,000. Then we also need the accumulated depreciation to date of sale. So from the time that we bought the asset, in this case, 1st of September 2006, right through to the end when we sold it, in this case, 31st of May 2008. So we had this asset for quite a few years before we sold it. And what we have to do is we have to gather all that information from when we bought it to when we sold it. First thing, cost price. The second thing, accumulated depreciation. The third bit of information is the selling price, which are also circled, 21,500. And the last is we have to calculate the profit or loss on sale of assets. So let's look through our exercise. Okay, we read our exercise and we said the cost price is 30,000. That's important to know. The accumulated depreciation to date of sale, we can't find it on our page anyway, so it must still be calculated. The third thing is the selling price, 21,500. And learners, you must know that enough information will be given to you in order to do asset disposal. The examiner will always give you enough information. You need to know what to go and look for. Firstly, the cost price, then the accumulated depreciation. You need to go and look for the selling price. And then finally, let's go to our PowerPoint. You will have to be able to calculate the profit or loss. And this we can only determine in this exercise after we've done B. Okay. I would like you to write this down, learners, because this is important. These are the 5 steps that we are going to follow each time we do asset disposal. Now remember, we're not quite into our exercise yet. Okay, we're just building up on information. So before you can do asset disposal, learners, I said there's the 4 things you need. And now, learners, there are 5 important steps. Step number 1, transfer the cost price of the asset. That is always step number 1. I will show you how to do that later. I'm hoping that you're writing this down. So step number 1, transfer the cost price. That's all you have to write. Transfer the cost price. Step number 2, calculate the depreciation for the current year. That is from the beginning of the year to when we sold the asset. Step number 3, transfer the accumulated depreciation on the asset to the asset disposal account. Okay, now there's a lot of information there. I will show you how to do that. So all you have to write down, learners, transfer the accumulated depreciation. And what I'll do is each time I do the exercise, I will keep explaining the steps. I'll say I'm doing step 1 now, I'm doing step 2 now, I'm doing step 3 now. Then step number 4, enter the selling price. Okay, and remember we said our selling price was 21,500. The last step, after having done all of that, we calculate the profit or loss on sale of asset. Learners, I just got a message here. I'm going too fast. I will slow down. Let me slow down and explain everything again. Thank you for letting me know that I'm going too fast. Right. Firstly, in order to do asset disposal, you have to know what depreciation is. It's an imputed expense that we write off as an expense to our profit and loss account or our income statement. So you need to know what depreciation is. Then, learners, you need to know that there are 2 methods of depreciation. Don't worry, I'm giving you information now, but I will go through everything when we do the exercise. So, depreciation and imputed expense. Secondly, you need to know 2 methods of doing depreciation. Firstly, the cost price method and the diminishing balance method. We will go through and I will show you how to do the cost price method, how to do the diminishing balance method. Thirdly, accumulated depreciation. And I will show you the double entry later on. Is a balance sheet account a negative asset? So you have to know, this is terminology that you have to know, learners. Terminology is important, so we have to lay the foundation first. Thirdly, there are 4 important things that you need to know before you can do asset disposal. Now, I'll write it down here. Firstly, you have to know the cost price. Okay, so you have to look for the cost price in the exercise. In this case, our exercise, it is 30,000. Right. The second part you need to know is the accumulated depreciation to date of sale. We don't know this in this exercise simply because it's not given. And when I do the exercise, I will tell you why that is an unknown for now. Thirdly, we have to know the selling price, and they give it to us. They say in this exercise, it's 21,500 Rand. So when I read my exercise, learners, when I read my exercise, I look for this information and I try to fill in the gaps. So what you do is when you get an exercise, you look for the cost price and you write it down. You look for the accumulated depreciation. This is often not given. It must be worked out. You look for the selling price. They give it to you. You write it down. You're building information, remember. And the 4th thing you're going to need to do asset disposal is you're going to need to know the profit or the loss on sale of asset. Okay. If you know what you're looking for, you will be able to do asset disposal. So do we have that? Let's see if there's any more questions. Can I repeat number 3 or number 4? Okay, number 3 and number 4, I'm assuming you're talking about this year. What I mean by number 3 and number 4 is you need to find the selling price, and I'll go through it. I'll circle it again on my page, the selling price and the profit or loss. This year, learners, is always a calculation. Now remember, we haven't started with asset disposal yet. I'm laying the foundation. Okay, so let me go back to my page. If I can just zoom that in, there we go. Thank you. Remember I said to you, the first thing we need is the cost price. Now, remember they said here, we are selling vehicle A. Okay, if we read all the information, they want us to calculate the asset disposal account. But I'm not interested in that now. I want to know, where is my information? So I read my information and I say, fine, I'm going to do asset disposal. I need the cost price. So I'll go and look for the cost price. Vehicle A is sold. So there's my information for vehicle A. So that is the cost price for vehicle A. That is given. Then I try to find the accumulated depreciation for vehicle A. I can't find it. Yes, I have accumulated depreciation there, but that's not for vehicle A. That's for all my vehicles. Okay, that is for all my vehicles. I want to sell vehicle A. Then I go and look for the selling price. Oh, there's the selling price. So that is my selling price. I don't have my profit or loss because I don't have step number 3. Okay. Thank you, learners. So, the first step, remember, we went through the steps. Would you like for me to go through the steps again? Yes, I see someone wants me to go through the steps again. Step number 1, transfer the cost price. Now, remember, my 4 bits of information I needed earlier on, I need so that I can apply my steps. So there's information I need, now there's information I must apply. Okay, transfer the cost price. My second step that I must do is I must calculate. I must calculate something. What must I calculate? Depreciation on the asset. When? I must calculate that from the beginning of year to when I sold it. I must calculate that bit there is from the beginning of the year to when I sold the asset. That's information that I need. Once I've done that, learners, now I can add that and I can transfer my accumulated depreciation. Okay, now can you see there the word depreciation is coming up again? There the word accumulated depreciation is coming up again. This was taught in grade 10 and this was also taught in grade 10, learners. So this is information that you have to know in order to do asset disposal. And sometimes asset disposal falls apart for some of the learners because they don't know these key concepts. So these are key concepts that you have to know and have to understand. I will go through it again and again as we do the exercise. Then we said step number 4 was enter the selling price. Now that we know the selling price, now we enter the selling price. And then step number 5, learners, was to calculate the profit or loss. Okay, these are very, very important key steps. So let's look at our PowerPoint once again, and I'm going to go very, very slowly. Step number 1. Now remember, we know that the cost price is 30,000. The exercise told us. So step number 1 said we must transfer the cost price. Learners, here we have the vehicles account. The vehicles account is an asset which increases on the debit side. An asset which increases on the debit side. So in the exercise, it says that the balance is 116,000. Now remember, learners, that's all our vehicles. We have 3 vehicles and they each, or calculate them, add them together, and they equal 116,000. On the other hand, we want to sell a vehicle, which cost us 30,000 when we bought it. Vehicles is an asset, it decreases on the credit side. So we have on this side our vehicles, I'm so sorry. On this side, our vehicles, which increased. Okay, we show we have an asset. On the other side, we're showing that we are losing an asset. Losing an asset on that side. Now remember, I spoke to you earlier on, learners, about historical cost. Now let me just explain to you again what historical cost is. Historical cost is recording the vehicle or the equipment in the books at its original cost. So we bought it a few years ago for 30,000. That vehicle remains in the books for however long we have it at 30,000. So therefore, when I take my vehicle out on that side, you see that I'm decreasing vehicles by 30,000. So I'm crediting my vehicles. Don't worry about what we write here. I will show you later on. And we debit the asset disposal account. That is step number 1. Transfer the cost price of the asset that I'm selling to asset disposal account. Someone wants to know where we are? We are at step number 1. We read all the information. We gathered the information. They said in the exercise, remember we gathered the information. They said the cost price is 30,000. The selling price is 21,500. That's all the information we got out of the exercise. We still have to work out the accumulated depreciation, and we still have to work out the profit or loss. So what I'm doing, learners, is I'm going through the steps that I showed you. I'm going to follow these steps now. So the first thing I did was I gathered my information. Okay, let me show you. I gathered my information. Can we just show this? Yes, I gathered all my information. I read my exercise and I gathered all my information. I looked for the cost price of the asset that I'm selling. I looked for that, but I couldn't find it. So I put a question mark there. I will have to work that out later. I looked for that and they said to me that it was sold for 21,500, learners. I also said that I will have to calculate that later. So the first thing you do is, learners, you read through and then you gather your information. So we've gathered the information, okay? I'm not sure that I should circle the information that I gathered earlier on. Now I'm going through the steps. So I'm going through step 1 first. Step 1 says transfer the cost price. Where do I transfer the cost price from? Can we just look at the PowerPoint again? I'm selling a vehicle, learners. So I'm transferring it from the vehicles account. That is my 3 vehicles, vehicle A, vehicle B, and vehicle C. There I'm taking out vehicle A. I don't want vehicle A in my books anymore, so I want to take it out on the opposite side to minus vehicles. I must show my double entry. So I must show that I'm decreasing my vehicles and that I'm posting that to asset disposal because I want to calculate my profit and loss later on. So I'm hoping that we are there. It says here there is no vehicle in my book. Oh my. I don't know what book you're reading from, but the exercise is this exercise, learners. Can we just show this? It's this exercise. It is activity 1.1. It is activity 1.1. Yes, we can move on. Thank you very much. Okay. Step number 2. Now you have to pay attention when it comes to step number 2, and I'm going to try and go through it very, very, very slowly. Please have your pen with you. You have to start writing and doing calculations. Okay? Step number 2. Calculate the depreciation from the beginning of the year from the beginning of the year to date of sale. Right, now guys, there I've got a blank timeline, and I love to work with timelines because timelines make sense. If you in your mind track the vehicle from when you bought it to when you sold it, then you draw a timeline. So let's look at this timeline again. There, we bought the vehicle according to the exercise on the 1st of September 2006. We sold the vehicle on the 31st of May 2008. Now, lots of things happened in between. Remember, we want to calculate step 2. Learners, we only want to calculate that portion there. But unfortunately, we have to go all the way back to when we bought this asset. Okay? So, there we go. The first time we depreciated this asset is in 2007. So, we had the vehicle for 6 months before we depreciated it for the first time. Let's show our calculation. From the 1st of September 2006 to the 28th of Feb 2007, we depreciated this vehicle, and the depreciation is 3,000. There seems to be some confusion. Can I just talk to the learners quickly? Learners, you can't do asset disposal in isolation. The exercise asks for the asset disposal account only, but you cannot only do the asset disposal account without understanding the effect it has on all the other accounts. So when I showed the vehicles account earlier on, it doesn't mean that the exercise asks for a vehicles account. All I'm showing you is how the asset leaves the vehicles account and ends up in the asset disposal account. So that is what I tried to do. Now I'm explaining to you how to do all the depreciation on this asset. We cannot just do the asset disposal account. There's calculations involved, there's double entries involved. So if you can, if the account is not there, just draw a T account and follow the explanation. Thank you. So let's go back to our PowerPoint. I'll explain again. We bought the vehicle there. That is the first time we depreciated this vehicle. So there we go, 30,000 at 20%. They said we depreciate this vehicle at 20% for 6 months, 3,000 Rand. Then the second time we depreciated this asset is there. So we had the vehicle for another 12 months. Now remember, we're only depreciating the vehicle A that we are selling. So we had this vehicle for another 12 months. Therefore, that is the calculation. Now let me talk about diminishing balance method. This vehicle is depreciated at the diminishing balance method. Now remember, learners, I said to you that I will re-explain what diminishing balance method is. Let me explain by drawing here. The vehicle cost us 30,000 when we bought it. We depreciate this vehicle at 20% every year. For the first half a year, we didn't quite have the vehicle for the whole year. We depreciated it, and the depreciation was 3,000. How do we do that? Okay, we take 30,000 on our calculator, we times it by 20%, 30,000, we times it by 20%. Now, that is 6,000 for the year, but we only want 6 of the 12 months. We can divide it by 2, or we can say times 6 divided by 12. Why times 6 divided by 12, learners? We only had this vehicle for 6 of 12 months, or half a year. So for our first year, or for the first time we depreciated it, we only took off 3,000 Rand worth of depreciation. Now, the diminishing balance method means that I depreciate the lesser value. So now I take 30,000, I minus my previous depreciation, and I get 27,000. And the 27,000 is my diminishing value. So that is my diminishing value there. So now I'm going to say 27,000 times that by 20%, because that is what I depreciate every year. And this time it's for a whole year. So I'm not going to write 12 over 12. I'm just going to leave it. And that would then be, on my calculator, 27,000 times 20%. And for the second year, my depreciation is 5,400. And that is, learners, how, let's go to our PowerPoint again, how I got to that. This is how I got to that. Now, what does this mean? This means that that is the balance as at the beginning of the year. My last step, learners, and this is really step 2. Okay, I must calculate, remember I said to you, that portion there. That is what I really want. Sometimes, learners, that amount is given. In this exercise, the amount was not given. So I had to go all the way back to when this asset was bought, because the balance as at the beginning of the year was not given. Okay, so that is what I want. So how many months would that be? From the 1st of March to the 31st of May. I count March, April, May, that's 3 months. And I'm going to depreciate my last 3 months. Let's see if there's any questions. Someone wants to know what asset disposal is, and learners, that is really something I'm not sure if your schools have dealt with asset disposal, but asset disposal is when we sell an asset, we dispose of, we're getting rid of an asset. Okay, it will all come together very soon, learners. That is step 2. Can we do step 3 now? Step 3 is transfer the accumulated depreciation to the asset disposal account. Okay, so there I have my accumulated depreciation account now. This was not asked for in your books. I just want to show you how we get that amount into the asset disposal account. So I have to show you the contra account. So if you look at step 2, now remember that was the additional portion that we had to put in. Okay, you're not going to show this in your books. I'm just showing you that that was the additional portion we had to put in, and therefore our accumulated depreciation as in step 3 is 9480. It is all the depreciations added together from when we bought the asset to when we sold the asset. Therefore, that you put into your asset disposal on the credit side. You take it out on the debit side and you put it in on the credit side. And there is step number 3. Okay, someone wants me to repeat the last step. I'll show you. I won't go through the calculations again, but I'll just show you quickly. That portion there, the 3,000, is that portion there. Okay, beginning of the year, the first portion. That second portion is the next time I depreciated this asset, and that portion there is what I really want in step 2. Okay, but I had to go all the way back. Therefore, that was the step. Show that again, and there we go. From this point on, learners, it is not that difficult. The portion where you write off depreciation is a very difficult concept. But learners, you have to know depreciation from grade 10. That is grade 10 work, and we cannot spend this hour trying to explain that. I've gone through this work very, very slowly. Sometimes you will have to go back and reinforce some information that you missed out on. So maybe if you've now identified that you really struggle with depreciation, then that is a very, very important aspect that you have to know in order to do asset disposal. But also remember, you can study the steps and just apply the steps. Sometimes in an exam, they give you all the information. Then all you have to do is just fit in all the steps. I'll go through the steps when I close off later. Okay, last bit of information is enter the selling price, and there we have, this is what your asset disposal account should look like. That is really what it should look like, learners. There we go. All the information we've added in. This was the only bit of information that you had to do, but I had to go through everything to show you how we got to that amount there, how that was entered into the books. I couldn't just show you that. Okay, there we have our step number 4. It is enter the selling price. And what we're going to do is we're going to calculate step number 5, calculate whether we made a profit or whether we made a loss. What we did was we added up the bigger side. That is the bigger side. Okay, you can see. Therefore, our balancing figure is going to be on this side, and we made a profit. We made a profit on the sale of the asset. You can see that we sold it for 21,500. We sold the asset for 21,500. That was our selling price. We can just show you 21,500. Okay. We sold it on credit. Just bear that in mind. So, how do we know that we've made a profit? If you take the cost price, which is 30,000, you minus the accumulated depreciation of 9480. How much do we get, learners? Let's do it on our calculators. 30,000 minus 9480, and we get 20,520. That is our carrying value or our book value. So that is what the asset is worth in our books, but we sold it for 21,500. So you can see that we sold it for more than it is worth. Okay. So we can then see that we made a profit of, if we can just look at the PowerPoint for the last time, we made a profit of 980 Rand. Okay, there we go. Step number 5, put in the profit on sale of asset. I just want to go through the steps again because I don't think that everyone quite understand the steps. Grade 12 learners, if you just follow these steps, you will be able to do asset disposal. Okay. Let me run through it on the PowerPoint quickly. I'll tell you what step number 1 is. The 30,000 was step number 1. That was step number 1, transfer the cost price. Step number 2 isn't really that. That is step number 3, but in order to get to step number 3, learners, we had to do step number 2, which is calculate that little portion from the beginning of the year to when we sold the asset. So we got that. That is all the depreciation on the asset from when we bought it to when we sold it. Right? Step number 4 is enter the selling price. Now remember I said it was sold on credit, so we write debtors control, general journal. It goes into the general journal. It does not go into the debtors journal. Please put it in the general journal, and we sold it on credit to a debtor. What we then did was we added the bigger side and simply subtracted the smaller side to get our profit. And remember I said to you, we can see that it is a profit because we sold the asset for more than its carrying value. It's important to know the word carrying value is that we sold the asset for more than that, so we must have made a profit. And remember, cost price is a very important formula to know, minus accumulated depreciation equals carrying value. That's also a very, very important formula to know. Cost price, which is a 30,000, minus accumulated depreciation equals my carrying value. Learners, I won't be able to go through how we got to, Monique wants to know how we got to the 9480. Learners, there won't be time to do that. Okay, the exercise said that we sold it on credit. I'm not sure if you're ready to go to activity 2. I will go through it a lot slower. there's not as many calculations here. I don't have a lot of time left, but learners, I'm going to have to go through this with you. One thing that I notice is that learners don't know how to do depreciation. That is why they don't know how to do asset disposal. Remember, with depreciation, there are two methods, the cost price method and the diminishing balance method. The diminishing balance method simply means you depreciate carrying value, my lesser value. Cost price, we're going to deal with cost price now. We depreciate the cost, the original cost. Learners, let's pay attention here to the PowerPoint, where I'm going to go through it step by step. Please turn to activity 2. Activity 2, it's on the next page, or sorry, it's at the bottom of that activity. Let's go through activity 2. Okay, let's read what activity 2 says. Now, sometimes there's a lot of irrelevant information, so let's read quickly what activity 2 says. I'll read through it much slower than I did the first one. Okay, it says Q Limited is a public company with an authorized share capital of 500,000 ordinary shares at 5 Rand each. That is really not important information for asset disposal. They say calculate the note that is in the balance sheet. This is the note in the balance sheet. Now let's look at the information quickly. It says an account was received from ABC Builders for the following. I'm reading under additional information. An account was received for the following: extensions to land and building, replacement of the geyser, and painting. Learners, you must know that we only add what the 80,000 because that adds value to the land and buildings. We only enter what adds value. The replacement of the geyser will go under maintenance, and so will the painting go under maintenance. So we're only going to put the 80,000 in because that adds value to the land and buildings. So let's see on our PowerPoint. You've got your answer sheet in front of you, I hope. We are busy with activity 1.2. There we go. We added in the 80,000 additions at cost. Okay. What I did was, now I take, I'm so sorry. Now I take my 820,000, I add my 80,000 and I get 900,000. So I take cost price, I add additions at cost, and I get closing cost price, right? This note is made up of 3 values: opening balances, movements during the year, and closing balances. So I take my opening balance, I add my additions, and I get my closing balance. With land and buildings, there is no depreciation. So depreciation remains naught, and so does accumulated depreciation. There we go, and that is what you fill in there. Learners, we'll have to close now. You will have to ask your teachers to help you with the next exercise. Asset disposal is really not a very difficult section, you must know. Important things you have to know. Know what you are looking for. There are 4 things you must have in order to do asset disposal: the cost price, the accumulated depreciation to date of sale, the selling price, and the profit or loss will be calculated after you've determined the first 3. Cost price, accumulated depreciation to date of sale, and the selling price. You determine number 4 after you have number 3. Then you follow your steps meticulously through your books. Transfer the cost price, calculate the additional depreciation, transfer the accumulated depreciation, enter the selling price, and then calculate the profit or loss on sale of asset. You will have to go all the way back to grade 10 to reinforce depreciation, because it was a section that was taught in grade 10. And by the looks of the questions, I can see that a lot of you don't really understand depreciation. And learners, let me warn you, you will not be able to do asset disposal if you don't know how to do depreciation. If I can just look at one more question. Someone said, thank you, Auntie Mandy. It was really a pleasure. And someone asked me what my name is. I introduced myself at the beginning. I said my name is Amanda Moyes, also known as Mandy. And someone said, thank you for the lesson. It was really, really a pleasure teaching you. I'm hoping that I got through to you. Certainly my intention is to make sure that all of you understand all of the aspects. I will ensure in the future that I go a lot more slower. Please do yourselves a favor. Before you come to the lessons, read up. Find out what is it that you need to know pertaining that particular section. You cannot come and expect us as the telematics teachers to teach you in 50 minutes what your teacher will teach you over a long period of time in class. If it is that you still struggle, please seek extra help. Get yourself study guides. And I'm really, really proud of you for being in the classroom on a hot Sunday afternoon to come and listen to an extra lesson in asset disposal. I will see you next time. Thank you very much, learners.